Hi guys, I'm Ryan Mack and this is the Trading Guys. Today I'm going to do a quick 10-minute video. We're going to quickly cover the patterns that we covered last week, and I'm going to cover the kind of waiting times for a pattern to play out. Alright, and I'll also throw in a candle pattern. How do you know when it's time to take the run? And it's based on a candle pattern that you're looking for. So here's the main body pattern, and then before you get into your entry, you're looking for a candle pattern. Alright, so if you're here, it's harder to see the pattern. Well, I mean, you can see it close up, but it is harder to identify as a whole unless you zoom out, and then look, it becomes very easy. So do you remember last week I was saying to you, the markets will run for around 3 to 5 days before they flip out, right? Before they kind of reverse out on you. And as you can see here, look, 1 day of rise, 2 day of rise, 3 day of rise, 4 day of rise, 5 days of rise, which is at the kind of upper limit. We've got the 5th day of rise, and what does it do? It pulls back for a massive correction. Now, we don't know if this is a correction or if this is a full-blown reversal, as if it's going to keep pulling down. But the only way to find out is on Monday. We come back in on Monday, and you don't have to place a trade on Monday. Just simply have a look at what the market's doing on Monday. So you don't have to wake up on Monday morning and jump on it. You can if you wish. But if you want to wait until Monday night, jump back on your trading platform Monday night, and you can see you can get a good idea of what happened on Monday, and then you can work out what's going to happen on the following Tuesday. All right. But we can see here, I'll just cover the pattern again quickly. We can see here price corrects, consolidation, fake move, long sustain run, levels off for continuation run, continuation run. So I'll zoom in so you can see that. Price corrects, consolidation. This is known as volatile consolidation because it's quite a big move, right? But it's consolidation nonetheless. Consolidation, fake move, long sustain run, levels off for continuation run, continuation run. All right. Um, you can see here, look, this is the box. If you watched my last video, you will actually see me painting this box in. And look where the fake move comes to. The fake move is exactly where my box is. Now, I know it's not in my box. That's not the point. This is just giving you a rough guide of when to enter. And the reason why that's not a problem is because if you look here, it didn't enter my box. So that tells me that it hasn't moved enough for it to be the genuine fake move for me to then take it going long. Alright, so here we've got price correction, consolidation. Here he throws you a couple of moves. This could be market news that makes this move happen, right? Doesn't run. Fake move, gets rejected at the 200 EMA and then goes long, sustain run going long. But look at this, guys. Look, if you missed this and you didn't get in here, it levels off for a continuation run. Continuation run. If you didn't get in there, look, levels off for continuation run, continuation run. This guy gives you 3 opportunities to get into this trade. The market maker gives you 3 opportunities. He gives you the fake move, bang, get in. Oh, I failed to get in. Gives you a second opportunity. I failed to get in. It gives you a third opportunity. Now, if you're looking at time scales between this, people mess up in trading because their entry is wrong. They get tricked by what's called emotional candles, where you feel, yeah, oh, if I don't get in now, I'm going to miss the trade. You're not going to miss the trade. Each one of these candles is 15 minutes, so every 4 candles is an hour, right? So 1, 2, 3, 4, which is 1 hour. 1, 2, 3, 4, 2 hours. 1, 2, 3, 4, 3 hours. 1, 2, 3, 4. 4 hours, 1, 2, 3, 4, 5 hours. I mean, look, he's given you about 6 or 7 hours to get involved in this trade, guys. Practice patience in the markets. Don't just dive in. I'm going to cover on this quickly. I'm aware I only have, 10 minutes to record this. We're already on 4 minutes, so I have to be careful. Um, So one of the guys that watches these videos, John, was saying to me that he was listening to a podcast about trading, and the guy was saying, yeah, I don't ever place a stop loss because the market maker can see everyone's stop loss and he stops you out. Well, that is absolutely true in the point that every market maker can see your stop loss. But you can't not put a stop loss, guys. Do not ever not place a don't ever sorry place a trade and not put in a stop loss. That is absolutely suicide. And I can guarantee you, if you do that 5 times, you will not have. I mean, you can do it 1 time and you will not have an account left. But let's just give you the benefit of doubt, and let's say you get lucky, right? You will not have an account left after 5 trades. I will absolutely guarantee you the market maker will wipe you clean. Don't ever place a don't ever place a trade without a stop loss, guys, ever. So John placed a trade the other day and then he got stopped out. So let's just say John placed his trade here, right? And he put his stop loss here at this area here, right? Then he got stopped out by a candle like this, and then it started running his way. Now, this is a common thing. I mean, I got caught out with that exact same thing myself. About 2-3 weeks ago, USD Japanese yen spanked me. I just got in too late, and I put my stop loss too low. And it was so, when I looked back on that trade that you know, it hit me, it took my money on that trade. Everything that I did on that trade, it was things that I did wrong. It was things that I was already taught and trained not to do. And I went ahead and I'd done it anyway, you know, and the market has a good way of coming back, giving you a slap and humbling you. And that's exactly what happened to me. So look, you should, for your stop loss, let's just go for your entry. For your entry, you don't want to get in here, guys. No way, because you don't know if that's going to run. Is this candle pattern a signal, an indicator that it may start its long run? Absolutely. Does it mean that it will? No, because it could be like this. Bang, it might come back and pull up again. It might give you one of these, it might come up, it might pull all the way back, and then it might make the run. So, before your entry, you want to I always wait until there's 3 candles after the move. So this candle pattern here, I would wait for another 1, 2 to 3 candles, and then I would get in. Because that's after about 3 to 5 candles is when you're going to find out if it's going to go on you or not. So that's when you would get in. And then what you want to do, if you got in the trade here, let's say on the 3rd candle, you want to put your stop loss 10 to 13 pips after the low of the day if you're taking it long, or obviously after the high of the day if you're taking it short, right? So what's 10 pips? Look, there we go. There's 11 pips right there, right? There's 11 pips at the point. There's 12 pips. If you put your stop loss at 12 pips, this spike is not going to hit you, and it's going to carry on going. One thing, how long have I got left? Right, I've got 2 minutes. One thing I will say, guys, do not ever move your stop loss. Alright, what I mean by that, let's say this was your stop loss, right there. Let's say this is your stop loss here, right? And this is coming down and you see this candle. Do not ever go at that, I'll just move my stop loss to here. And then, it's coming down a bit further, so I'll just move it again. You're going to empty your accounts. See if you're going to move your stop loss in a negative manner. You may as well not place a stop loss, because all you're going to do is wipe your account. I'm telling you, you're going to end up with a $500 loss just because you keep saying to yourself, oh, but it's going to go, and you're just going to pull it down and it's going to end up pinning you out, guys. If it's going to hit your stop loss, just let it. Because when you place that trade in the stop loss, that means you have already worked out how much you are willing to risk that day on a trade. And see if it stops you out, so be it. You know, that's what happens in trading. How long have we got? 9 minutes, 1 minute. Okay, so look, quickly, most people think trading is like this, guys, when your profit's going to go up. No, it is not. If you want to be realistic on trading, this is what we do to trading, guys. You're going to see months where it comes up. You're going to see months where we didn't do so well. You're going to see months where it comes up again. This is a typical trading platform. And what you sometimes you'll see this. Right? And that's absolutely normal. So what you want to look at is at the end of a year, let's make it smaller, you want to be looking like this. Right? You're going to have times where it comes down, then up, like this, and it marks back again. But what you're looking for over the time is that by the end of the year, you are up. You're still going to be up, alright? So, yeah, if you look on your account 1 month and you might be down 300 bucks